So I used to hesitate, I used to overthink, I used to blow counts, but something changed recently after a couple of months of struggling, and it finally clicked in. Now I decided to document the whole journey. My name is Ali. This is my trading journey of becoming consistent, disciplined trader. No lies, no editing, losses, no fake profits, just a real progress, real psychology, real growth. If you're on the same path, consider this your home. Without further ado, let's get into it. Oh, before anything, this is not a financial advice. I'm not a guru. I'm literally going to document my journey from now on, and let's get right into it. So let me just kind of do a break quick. I'm gonna do a quick breakdown of the strategy, and then we'll get into some back testing, and we go from there. So let me get rid of these session indicator and the hour indicator. The strategy is pretty simple. Let's say this is your hourly candle, and this is your wicks. Let's say, for example, this is a let's say this is a if I can, for some reason it's not working. There we go. There we go. So let's say this is an hourly candle. Assume this is an hourly candle. Let's say this is another hourly candle. Let's say this is the wick on that one. This is a wick here. Let's put it right in the middle. Alright. So the strategy is very simple. I guess it goes the other way, sorry. So the strategy is very simple. Let's assume this is an hourly candle. It's something called CCT, uh, candle continuation theory, and the entry model is something called ICC. I didn't come up with these ideas. These ideas from Trades by Sai, and there's also another YouTube channel called Carmen Capital. You guys should go check those channels if this is your first time watching me. But if you're watching my channel, I'm assuming you already know those guys. But there was somebody in the group chat who wanted me to go over the strategy. So I'm trading prop firms, and I trade NQ, sometimes ES, and mostly gold, but mostly gold and NQ. So let's say this is an hourly candle, this is another hourly candle. Oh, by the way, it doesn't matter if it's a New York Open or New York PM session, Asian Open or London session. It pretty much works on any time as long as you have a context on higher time frame and the overall direction of the market on a daily and the 4 hour. But you don't want to really pay too much attention to those. You don't want to overcomplicate it. So let's get into it. So this hourly candle is another hourly candle, and you once you're done, you just set an alarm in here in this line, and you just wait for the 1 minute candle to come and go below this line, and then the moment it got back above this line, that's when you buy. You put your stop loss below this swing low, and then you target this liquidity right here, or you target somewhere in the middle, somewhere here, or some sort of psychological number. And I'll go over it more in depth. That's it. That's the entire strategy. Very simple, very easy. Once you unsee it, you cannot. Once you see it, you cannot unsee it. I guess that's the saying. So let me go over it real quick. Let me just delete this. So let me turn on these. These are just free indicator if you want to have them. Daily divider and sessions. They're free indicators you can use. So let's go, for example, let's go back beginning of the week. last week. So let's go to there it is. So this is the Friday after the it's the Friday after Thanksgiving, beginning of December. So we kind of ran out of juice, as you can see in here. It's the first hourly candle, and we broke through this previous indication. So we broke through this previous indication. We know the price has to go from here to here, or somewhere in here. We know we are due to some sort of correction, and that's what Trades by Side teaches. He teaches indication, correction, and then continuation. That's your higher time frame idea of what you want to keep in mind. And there are all these low resistant liquidity that we can target, or even this low. Let's say the market in the Asia just opens and you get your first red candle, and then you get this other red candle. So that's very important. You either want to have two consecutive green candle or two consecutive red candle. That's the only way this strategy works. And as soon as you see it close that candle, you want to do it immediately. So you want to set an alarm when the hourly candle closes. You just want to get on it right away. So you draw a line for the next hour or next 2 hours, and then since it's going down, let's do it red to be more clear, and then you immediately go down to 1 minute. So on the 1 minute, you wait for it to come back up, and then wait for it to close below it. So right now, came to this line, already closed below it. Let's say this is a micro contract, so we sell 3 of them, so that way we can target different liquidity. And the risk to reward ratio in this strategy is insanely high. I'm gonna show you why. So you put your stop loss right above this, right above the most recent swing high, since we are selling, and you can target pretty much all these stacked low resistance rate liquidity, and also this gap from the previous day. So we go for example here. You can technically, if you want to be very ambitious, you can technically target all the way down here. You don't have to. The reason why I'm doing it is because I have 3 contracts, so I can take a profit. What's like the low hanging fruit? I would say your low hanging fruit is right here, right here, right here, and right here. So let's buy one more let's sell one more so we have 4 of them, because we have good enough targets. Sometimes you don't have as many targets. Sometimes you see this, and then it's very discretionary when it comes to contract with the micro contract. And as you start trading this system more and more, you realize how many contracts you should buy and where you should take profit. So let's say you want to take profit here. Let's say you want to take profit here, lock in the profit. You want to take another profit here. And let's say you want to take another profit here, and then that's your last draw, which you may not get. And as soon as you get to the first take profit, you're halfway through the second take profit, then you want to move your stop loss to break even. That's how I do it. That's how it's been working for me. So now let's play it out. So there it is. So we're about to hit the first. Damn, that's it. So we hit the first take profit. Oh, and the biggest thing about this strategy is it's very, very simple. If you've been watching ICT content, TJR content, anybody's content, and mostly the ICT content is very complicated, or even people who trade with volume profile, that's also very complicated. Your mind is filled with complication and BS of the industry. And when you see this strategy so simple, at first you're going to hesitate and you're going to be fearful, because you're going to be like, no way, it's that simple. No freaking way it's that simple. But it is. I've backtested it and I've tested it past week and a half, and it works like a charm. And it has a very high. It's what makes it so good is because it has a high win rate and it has a high risk to reward ratio. So now we took our first target, we hit it over 100 ticks. So if you're trading at NQ 100 ticks, you're done. That's $1,000. But if you're trading prop firms, you can't just go ahead and risk a full NQ contract. You have to go to MNQ, risk a little, risk about 3 to 5 contracts so you can take partial profit. So once you're halfway through this, then I put my risk to reward, my stop loss to around break even. And let me show you the risk to reward. See how insanely good this risk to reward is. So our stop loss was here, so only 47 ticks. On 4 contract, you don't lose much. You only lose, let's say, 47 times 2, so you lose $94 if the trade doesn't work. If you have a funded account and your drawdown is, let's say you only have $1,000 left in your drawdown. $1,000 divided by 10. So with this strategy, you have to lose 10 consecutive trades before you blow the account. Impossible, unless you're doing something insanely wrong. So, and then let's go all the way here. Look at that. That's 725 ticks. That's 1 to 15 risk to reward ratio. And I've hit 1 to 20. I've hit 1 to 20, 1 to 30, 1 to 10, 1 to 15 risk to reward ratio with this strategy. It's insane. So, and this is the trade I think I took, or yeah. There it is. Boom, boom, boom. Here we go. The next target hit, and then you move your stop loss back to this level, because the price may come back around here and wanting to take more liquidity and go down. But that's how you, if I can remove this thing, there we go. Let me just do that, do this, there we go. That's how you dynamically move your stop loss. Some people don't move their stop loss at all. Some people move it. Some people trail the stop loss too aggressively. That was one of the couple of mistakes I made this past week. I was trailing my stop loss too aggressively. Let's go boom, 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 boom. Once you're that deep, you just move it even more. We already took this one, okay. Boom. That one was hit, and then you see I constantly move my stop loss to the most recent swing high or swing low, depending on what you do. Boom, just like that. So we got into this trade at 1858 and we got out of it completely by 20. So took about 2 hours and about 725 ticks, which we took partials along the way, so about roughly around 500 ticks. But even if you would target here, look at that, that's 1 to 6. Heck, even if you would target here, which is like such an easy trade, even that one is a 2.0 risk to reward ratio with 96 ticks. At the regular, with about 5 contract, let's say you want to buy 5 contract, 5 contract is about 25 cents per tick, times 96, that's 240. That's times 5 prop account, that's $1,200 in a matter of 4 or 5 minutes, and you're done for the day on a opening of an Asian session. So hopefully I can show you I'm gonna try to show you a long examples. Let me see if anything presents itself. So we know we're in a overall higher time frame, we are in a correction because ICC is indication. Here, ICC is indication, correction, and then continuation. This is ICC: indication, correction, continuation. Very simple. And the CCT is the candle continuation theory, which means if you're on an uptrend, you're continuously going to go uptrend after testing a previous wick to the upwards. Same thing to the downwards. You saw this, that we came down here. We touched the previous down low wick, and then we continue to flush. So you kind of wanna, if you have a like back in the back of your mind, even if you see none of these, you see none of these candles. Let's say you don't see any of these candles. Doesn't matter. The strategy still applies, but it works better if you have some sort of understanding of the higher time frame, which is very easy. Indication, correction, indication, correction, indication, correction. It's very simple, very easy. None of that ICT crap. There we go. So let's go here. So we are one up. Let's say we go here, mark here, and we're gonna do green one since we're going up. We go down to 1 minute. So we took it, we went above it, and let's say we buy 3 of them. We buy here, do a stop loss here, 49 ticks. We target the most recent. I mean, you can target here if you want, but you want to definitely take partial profit here. Say we take out 2 in that. And if it doesn't work, market always give you second or third opportunity to get in. Let's see if this one gonna work out or not. Boom, it worked out. So we took out our 2, and boom, we move our stop loss above the break even, above this most recent, and see if we're gonna hit our second take profit. We got so close to it. So, and then we're gonna move it to this, see if we're gonna hit it. Alright, let's move our stop loss to this most recent swing low, and boom, we're out. So how much was that one? What was the risk to reward on that one? So our combined, let's say we're out there. So 1 to 3, you risk 47 ticks for 143, 147, and this is the beginning of London session. So I showed you an example of shorting. I showed you an example of longing, and it's pretty damn simple. So if you have any question, let me know. If you're an absolute beginner, like you know nothing about charts or trading, I would just recommend go watching their videos, Trades by Sai, SCI, and Candle Continuation Theory by I think it's Carmen's Capital or something like that. Just search for CCT concept. It should pop up on YouTube. But I'm going to make more videos from now on, just documenting my journey, my payouts, and everything else. I don't wanna make this video longer than it already been. So see you guys in the next one. Subscribe if you like, leave a comment if you have any question, if you have any feedbacks, let me know. See you guys in the next one.